Imagine waking up every month and seeing thousands of dollars deposited into your brokerage account without selling a single share. That's the power of dividend investing. For many investors, building a portfolio that generates consistent passive income is one of the ultimate financial goals. Instead of relying entirely on a paycheck, a strong dividend portfolio can provide income month after month, year after year. But how much money do you actually need to invest to generate $5,000 per month in dividends? And which stocks could potentially help you achieve that goal? In this video, we'll break down the numbers, explore 5 popular dividend stocks, and discuss how a long-term investor could build a portfolio designed to generate reliable income. Before diving into the calculations, let's briefly discuss what dividends are. A dividend is a payment that a company makes to its shareholders, usually from its profits. When you own shares of a dividend-paying company, you can receive regular cash payments simply for holding the stock. This creates an opportunity for investors to earn money not only from stock price appreciation, but also from recurring dividend income. For many people, dividends represent one of the most attractive forms of passive income available in the stock market. Now let's answer the big question. If your goal is to earn $5,000 per month in dividend income, you would need to generate $60,000 per year. Assuming your portfolio produces an average dividend yield of 4%, the math is straightforward. You take your desired annual income of $60,000 and divide it by 0.04. The result is $1.5 million. In other words, an investor would need approximately $1,500,000 invested in dividend-paying stocks to generate around $60,000 annually, or about $5,000 per month, assuming a 4% average yield. While that may sound like a large amount of capital, it demonstrates how powerful dividend investing can be for creating a sustainable income stream. One of the first stocks many dividend investors consider is Realty Income. Often referred to as the monthly dividend company, Realty Income owns thousands of commercial properties and collects rent from tenants across multiple industries. The company is particularly popular because it pays dividends monthly rather than quarterly. This feature makes it attractive for investors seeking regular cash flow. Realty Income has built a reputation for reliability and has maintained a long history of paying and increasing dividends over time. In our example portfolio, we could allocate $300,000 to Realty Income as part of a diversified income strategy. Another widely respected dividend stock is Johnson & Johnson. As one of the world's largest healthcare companies, Johnson & Johnson operates across pharmaceuticals, medical technology, and healthcare products. Healthcare tends to be a defensive sector because people continue to need medical products and services regardless of economic conditions. Johnson & Johnson is known for its strong balance sheet, consistent earnings, and impressive track record of dividend growth. Investors looking for stability often consider this company a cornerstone of a dividend portfolio. In our sample allocation, another $300,000 could be invested in Johnson & Johnson. The third company on our list is Chevron Corporation. Chevron is one of the largest energy companies in the world and has rewarded shareholders with dividends for many years. Although the energy sector can experience periods of volatility, Chevron's scale, cash flow generation, and commitment to shareholder returns have made it a favorite among dividend investors. Energy demand continues to play a critical role in the global economy, and Chevron remains one of the industry's most established players. In this example portfolio, we could allocate $300,000 to Chevron. Next is Coca-Cola, one of the most recognizable brands on the planet. Coca-Cola products are sold in more than 200 countries, giving the company an enormous global footprint. The strength of its brand, combined with its consistent revenue generation, has allowed Coca-Cola to increase dividends for decades. Many investors appreciate the company's ability to generate stable cash flow even during economic downturns. A $300,000 allocation to Coca-Cola could provide additional diversification and stability within the portfolio. The fifth stock is Procter & Gamble. Procter & Gamble produces everyday consumer products that people use regardless of economic conditions. Its portfolio includes household and personal care brands that have become staples in millions of homes worldwide. Because demand for these products tends to remain stable, Procter & Gamble has been able to generate reliable earnings and reward shareholders with growing dividends over time. Allocating $300,000 to Procter & Gamble would complete our example dividend portfolio. Putting it all together, our sample portfolio consists of $300,000 invested in each of the 5 companies: Realty Income, Johnson & Johnson, Chevron, Coca-Cola, and Procter & Gamble. This creates a total investment of $1.5 million. Assuming the portfolio achieves an average dividend yield of approximately 4%, it could generate around $60,000 in annual dividend income, which works out to roughly $5,000 per month. Of course, actual dividend payments will vary based on company performance, future dividend increases or decreases, and market conditions. One of the greatest advantages of dividend investing is that it can provide consistent cash flow without requiring investors to sell shares. In addition, many dividend-paying companies increase their payouts over time, allowing investors to potentially earn more income each year. Reinvesting dividends can further accelerate portfolio growth through the power of compounding. For investors focused on financial independence, dividend stocks can play a valuable role in building long-term wealth. However, investors should remember that dividends are never guaranteed. Companies can reduce or eliminate dividend payments during difficult periods. Stock prices can also decline, and economic recessions can affect corporate earnings. This is why diversification remains essential. Spreading investments across different industries and sectors can help reduce risk and create a more resilient income portfolio. The key takeaway is that generating $5,000 per month in dividend income is achievable, but it requires substantial capital, careful planning, and a long-term investment mindset. By focusing on high-quality dividend-paying companies and remaining patient through market cycles, investors can work toward building a portfolio capable of generating meaningful passive income for years to come. If you enjoyed this video, make sure to like, subscribe, and leave a comment below. Let us know which dividend stock is your favorite and whether you would choose any of these companies for your own passive income portfolio. Thanks for watching, and we'll see you in the next video.